Yeah, what's up, everybody? It's your boy Orlando, aka King Smitty. Welcome back to my trading journey. Before we get started, I want you all to hit that like and subscribe button, and as well as take advantage of this free promotion here at webull. Just deposit $1, you get 12 free stocks ranging anywhere from between $3,000 and $3. So the 12 stocks can be ranged anywhere in between there. Use my link below. Don't forget, like I said, hit that like and subscribe button so we can get more viewership and more exposure here on YouTube. And I really appreciate y'all for rocking with me. We are almost to 100 subscribers. As you know, that's been our first goal for this YouTube channel. I'm not going to show my portfolio in comparison to the S&P 500 because I am on Charles Schwab now. So the time frame for the year to date is a little bit different. And I didn't calculate it before I left over from TD Ameritrade. I don't have access to that platform no more. But today, I'm going to talk about a little bit more of the market overall. I have been doing a little bit more day trading lately. Probably, if not every other day, every day. Um, and for the most part, I have been doing great on there. I've been taking at least 10% profit, anywhere between 10 to 30% profit consistently. I did have a kind of a large loss. And so since I did have a larger loss compared to normally, um, I decided not to day trade on the SPY for the next month, just so I don't have any wash sales. I normally don't care about wash sales for the my small losses, because I'm gonna make that right back in another trade. But for that large loss, I do want that to offset some of the wins I had this year in the stock market. So I'm gonna let that sit for the next 30 days. So in the last week, I have been trading the QQQ, the 0 day to expire options. I like to get in and get out, be real quick about it. Um, but here, let's take a look at what I go through in my mind and on the charts before I take a day trade. You can see here, this is the SPY, ticker symbol SPY. This is the monthly chart. It's currently sitting at $410. And when I'm looking at the charts, what I like to do is look from a larger perspective and then work my way down. As you can see on the monthly chart, it looks like a double top. The first one's right here, December 31st, 2021. And then the second one is right here, August 31st, 2023. So in the long term, this is a double top pattern, which is known as a reversal pattern. So I definitely can see this stock coming down, and as you see, it's at 410 right now. So the next level would be roughly $400, 402, $405. If it breaks below that, it could definitely come down to like $380, right? And you can see the RSI down here. Yeah, it's currently sitting at 50, so it's pretty much neutral. The MACD is looking mildly bullish, but it's no separation in between the two, so it's still a little bearish to me. We're gonna go down to the weekly chart. On the weekly chart, you can see it. We're gonna zoom in a little bit, and on this weekly chart, this yellow line, I can't highlight it. I apologize. Oh, actually, boom. We're going to draw right here. Oops, it's horrible. That line right there. That is a Bollinger Band, right? And the Bollinger Band shows roughly the area from which the stock will trade in. And if you look up top, you'll see another Bollinger Band. So that red line up top is the upper band, and this greenish yellow line is the lower band. So normally when it hits that bottom band, you can expect it shortly to bounce up because it's gonna want to stay in those bands. And you can see right here, what date is this? Was it July 28th? It started touching. Well, it was touching the upper band. You can see all the way from June 2nd to July 28th, it was touching that band. So at that point, and it was starting to get overbought down here on the RSI. It's in the 70s at that point, right? So once it crossed back underneath that 70 mark right here on the RSI at the very bottom, that orange line, it came back down. That's one signal that you could buy a put. And then it hit the Bollinger Band, the upper Bollinger Band. That's another sign that you can start buying a put. This is still long term because this is weekly chart. And then you can see shortly after that, say if that wasn't confirmation enough for you, you can come right here. You can see the MACD crossed over and we're starting to get bearish. And on that same day, it was like the last little bit of the first bear run. It popped up a little bit, and then it continued to fall. Now that it's at that lower Bollinger Band, we could see a little brief pop up. We're going to go down to the daily chart. So the daily chart, and you can see over here that it was in the channel. Starting right here, all the way down to here. It was trading in the channel downward. So that's from July 27th all the way to August 23rd. We're on the daily chart now. And you can see down low, the MACD crossed on the daily chart. And as well that it started, the RSI crossed as well. Right here. So that's two confirmations. It already touched the upper Bollinger Band. And you can see it begins to fall. The price begins to fall. Oops, let me not move my... Price begins to fall from 475 all the way down to 431. So you put a put on a daily time frame, like a swing trade, you could have made a lot of money right there. Right? And then you can see it curved. And then you kind of get a couple buy for calls for on a ride up right here, I would say. Right here. See, there's a big green candle on August 29th, as well as the MACD crossed over as well. But what you would do for there is definitely I would put like a stop loss. And of course, this is just looking backwards on it because, of course, it dropped. But I like to lock in profits, especially on my day trades, around 10% for sure. So it can keep running up, but at least I lock in my 10% at the minimum. Then keep coming over, and you can see right here, boom, the MACD crosses over again. Then it begins to fall. Right here, it crosses over again. It was recently oversold, So of course a bounce, and it's touching the lower Bollinger Band. So you can expect, a little turn soon. It's touching the Bollinger Band, and the MACD is crossing. So that Bollinger Band touch right here on October 3rd, the first indicator that a possible turnaround could be coming soon. And then a couple days after that, the MACD crossed. And then it shortly went up, and then boom, you have another downward cross right there. So now you see that we're on the Bollinger Bands again. This is still the daily chart. I can go down to the 30 minutes for you. And you can see, I want you to look at this. On the weekly chart, it's touching the lower Bollinger Band. Right? All the way over here. On the daily chart, it's touching the lower Bollinger Bands. On the 30-minute chart, it was touching the Bollinger Band right here. But then you see it bounced up. So how would I play this? Of course, I like to react and not predict. So I was trying to see. Let me go back to the daily chart, and we're at 410. So you can see by these blue lines. Going back to the weekly chart, that 410 is a level of support. You can see right here at this date, February 17th, it bounced down off of there. It was a resistance line. You see it's hitting resistance over here. Finally broke across. You go even further back in time. This date right here, March 18th. It bounced off of there, went back up. So this is a kind of strong point of support. So like I said, we're being at a strong support, and we're touching a lower Bollinger Band. I could definitely see this turning around in the next couple of days, maybe a week. I wouldn't be upset if we do, drop back down a little bit lower for another week. But what I would be doing is keeping my eye out for a possible reversal. Not a huge one, because as you can see, we are on a double top. But a smaller one, maybe you bounce back up to 430 for sure. I could definitely see that happen. And maybe even get to like 420, 425. But what I will be doing is I'll be watching the market. And if I see it's coming lower, like I said, I wouldn't be surprised that at that point I'll be trying to place a put. And I've been showing you the whole time. Like, for example, you see this cross on the lot. It's a 30-minute. Boom. It's right here. It crosses down to the red. You see it was just overbought. So you can know it's going to come down shortly. Then the MACD cross, it drops. Boom. It comes back up. Another cross on the MACD. It's nothing major. And then it comes back down. Boom, the MACD crosses again. And after this MACD crosses again, you can see it's just a big drop. So what I'll be doing is I'll be watching, because as you see on the 30-minute chart, like I said, it's not touching the Bollinger Band no more. It could on Monday, depending on what happens, touch that moving average, which is the purple, yellow, and orange one in the middle of the Bollinger Bands. If it can bounce or will break above that, I can see us going to the upper range of the Bollinger Band, which is currently 413 right now. But as it goes up, the Bollinger Band should kind of expand a little bit. So we could definitely get back to 415 easily in a day. So that'd be a nice raise up, a ride up. once it hits that upper Bollinger Band, maybe I'll put some puts in and ride it back down. Put me a stop loss in just to lock in some profits. But that's kind of how I look at the day trading. I start from a large perspective so I can see long term. It looks like the market could reverse. Short term, because it's touching the Bollinger Band so many times and we're at a level of support, we could get a bounce up. So for me to be looking for calls in the very, very short term isn't crazy. Me looking for puts in the midterm and in the midterm isn't crazy, because in the monthly chart I could definitely see this coming down. But in the long run, this is the perfect time for me to be loading into my long-term positions as this market corrects itself and as the market comes into a bear market. So that's what I do. Like I said, in the short term, I can see myself buying some calls. In the medium term, some puts. But for the long run, my buy and holds, I do feel like this is the opportunity to start loading up. I'm not saying I'm going to load the boat right now, but I'm definitely going to start loading up. So some of the plays I'm going to load up on, and I've already kind of begun since these prices have been dropping. The first one is Tesla, ticker symbol TSLA. I did begin to start buying into that again once it hit 205. Once it drops below 200, I'll start buying a little bit heavier. If it goes to 150 or anything like that or below, that's when I will be heavily focusing on Tesla for the long run. Another one for the long run, Google. If it goes below, I haven't looked at the technicals recently, but if it goes below 110, I'll start nibbling at it. Like 102, I'll start buying a little heavier. If it goes below 95, I will start to put more focus on Google as well. Another long-term play, if Maine, which is my monthly dividend play, gets below 35, I will throw a large chunk of money in there, because that's going to be some passive income, and that's going to compound month over month. So if I can get that snowball, or if I can get that little chunk of change into a snowball, get up on that right heel and roll it down, then it should continually accumulate money for me and continually grow larger. And as I can, I will throw more money in there to grow that snowball, so that way eventually, the snowball will be huge and I have a good passive income coming from ticker symbol MAIN, Maine. Apple. I'm not sure what those prices are, but if it hits 130, I'll start 140. I'll start nibbling. 130, I'll start buying. Anything under 120, it's got my full focus on there. I haven't really been handling Apple like I should for it to be the biggest country in the world. I mean, the biggest country, the biggest business in the world. I really haven't been investing like I should into there. Got me focused on other plays. But that's for my main portfolio. Yes. For my portfolio that I do a lot of my day trading in, if Nvidia goes below 380, I'll buy it again. I started buying Nvidia last year, it was on like $150. But if it goes below that price, I'll start buying again. If Amazon goes below 115, I'll start lowering my price. It goes below 100, it's got my full attention. SoFi, ticker symbol SOFI. I previously bought that around the mid $5 range. It ran up to was it $10? As it came down, I did sell some of mine, at least half my position. So I think I do have a limit order already set for like $6.80, where I will begin to nibble at it. If it comes down into the high fives, like 580 or 590, I have a large chunk from my profits that I sold earlier. I'm putting it back in there since it's at this $5 and $6 mark, and then I'm gonna let that run back up to $10, $12, maybe $15, and then I'll probably sell it again up there, half of my position. And then instead of me putting it at $5, I might put it at $7 or $8, wherever the new floor would be at that point, the new consolidation point, and then wait for it to run up again, rinse and repeat. I might throw some change at Neo. Neo's a long-term growth play. It's really iffy, but when the market did turn around briefly, Neo had a huge run. So if I could lower my price range, my price on there, my average cost, when the market does turn around for Neo, I actually positioned to make a lot of money. That's that portfolio for the most part. My last portfolio, I've just been pretty much averaging my cost in Ethereum, Dogecoin, adding to that. I haven't checked SHIB in a long time. Excuse me. What else? There's another cryptocurrency. Oh, Bitcoin. I just started throwing change, literally change at Bitcoin. Kind of like I'd rather it just sit in Bitcoin for a little bit than just be in my portfolio doing nothing. So I've been throwing change at Bitcoin. Whenever I need it, I might just take it out. I bought Palantir in this portfolio at $15. I sold it when it got to like $18, a good chunk of it. And then once it got back to 15, I bought a little bit more. I have another limit order at 14, another one at 11. I'm gonna buy it on this way down, so that way when it does run up again, I'll be positioned set. I'll be set in a good position, because right now this year it was all about the hardware for the AI, which is why Nvidia had this run up. But once all the hardware is properly distributed, now here comes the boom for the software for AI. And then they have a lot of government contracts as well. And of course, with this war going on, the need for defense, I mean, it's Palantir. So it made a little run off of there, but like I said, short term, I probably look for a reversal on the short term, a little bounce, do some calls on the way up as it goes up a little bit, depending on if it hits the Bollinger Band or if it bounces off the moving average. I might consider doing some puts and riding it back down. But that's me. I appreciate y'all for rocking with me, sharing my journey. Let me know what you're doing with your portfolio. Of course, everything I say is just entertainment. I'm not a financial advisor. I'm just sharing my trip and my journey to my financial goal, to where I want to be. And I want to show my friends and family that you don't have to be a millionaire or on Wall Street to be in the stock market. Appreciate y'all.